In this video, I'm going to do a quick market wrap on where I think a couple markets might be headed. So yesterday, the dollar did close pretty convincingly below that 100.5. That was the breakout level. We've closed below that. I'm seeing a lot of analysts that are anticipating a cycle bottom in the dollar right here. They've got this cycle on day 28, but I think they are incorrect in their cycle counts. The timing bands for the currencies have expanded. They've evolved as time goes on. We've got global QE. I mean, how could they not evolve into different patterns than previously before we had global QE? So I think what we've got here is this was a half cycle low. I know a lot of cycle analysts are wanting to call this a full daily cycle low, but we didn't have any kind of a dip in the middle here to produce a half cycle low, and you kind of need that half cycle low in order to construct the daily cycle trend line. So if I'm correct and the cycle durations have expanded, then this was a half cycle low. So the dollar's not on day 28, it's on day 49, I believe. This was a dip into a half cycle low. We can construct the cycle trend line from these two pivots. You can see once the price broke that trend line, then we started to move down into the daily cycle low. And I think, as I said in my video the other day, I think we've still got further because the controlling currency right now is the euro, not the dollar. So people are looking at the dollar cycle and counting the days in the dollar cycle and trying to extrapolate a cycle low from that, but the dollar is not the controlling currency, the euro is. And this bottom right here was at least a bottom of intermediate degree, and it's possible that it's also a yearly cycle low, which would mean that price will not fall below this level for the rest of the year. If that turns out to be the case, then this is also a multi-year cycle low. But either way, it's at least a bottom of intermediate degree. And that being the case, then the first daily cycle should be powerfully right translated. By that I mean it should rally for at least, I'm going to say at least 20 days, maybe even as long as 25 days before this cycle tops. So there are a couple of potential trigger events in the next couple weeks that could, where the euro could form its cycle top. We're on day 14 right now, so that's too early. One potential trigger would be on Friday. That's the GDP report. That would be a potential trigger for it to form a top, and that would give it 4 more days, so that would push it to day 18. I tend to think the FOMC meeting on the 1st is a more likely trigger, and that would give us another 6 trading days, I guess, before the cycle top. And then on the outside, maybe the employment report on the 3rd. But I doubt that the euro is going to form a final daily cycle top until sometime next week, maybe next Wednesday or next Friday. And then we get a pullback into a daily cycle low, something that lasts just long enough for let's say the 5-day RSI to move down to oversold conditions, and then a bounce, and we start the next leg up. So until the euro tops, I'm not expecting the dollar to bottom. So if we get some kind of a flag pattern in the dollar for a few days before the euro finishes its rally and the dollar finishes the move down into its daily cycle low, gold could continue to kind of churn below this 38% Fibonacci level. But assuming I'm right and the euro does have one more pop higher before forming its cycle top, then gold should have another one more rally before finding its cycle top. As I noted in my video the other day, a potential spot would be maybe this pivot right here, this resistance at 1243, somewhere between that and the 50% Fibonacci at about 1250. So I'm kind of expecting gold to just churn here for a few days until the dollar's ready to complete that move into the daily cycle low, and then we get one more pop, maybe up into this resistance level here before gold finds a cycle top, and then we get the same thing as the euro. We get a corrective move back down, something that lasts long enough to push the 5-day RSI to oversold, and then we would get the next leg up. But before the intermediate cycle tops, gold will need to break this intermediate trend line. And I'm going to say again, if you save yourself all the headaches of worrying about the daily moves, if you just convert to a weekly chart and then just track this slow stochastic, the slow moving average should probably reach overbought up here before gold has any chance of completing that intermediate degree rally. So what I think is probably happening is the that intervention in the stock market on the election night that pushed stocks up, that took the dollar up with it. I suspect that probably, well, clearly it did. It stretched the gold cycle. We were at our intermediate bottom right here on week 18. That intervention in the stock market stretched the gold cycle to 28 weeks. But it hasn't stopped the bull market. But what I think it did do was it's probably knocked gold into a triangle consolidation for the rest of the year. So I'm going to go out on a limb and say that this intermediate cycle at some point here in the next month or two will probably come up here and reach somewhere between 1320 and 1340, 1350 maybe on the high side. But it's probably not going to break out above this top. We probably have entered a triangle consolidation. So then at that point, we'd move back down into an intermediate cycle low in the summer that would maybe come back down and tag this lower trend line again. And so I'm going to say 2017 is probably going to be a consolidation year for gold, where we just bounce back and forth in this triangle pattern. And it won't be until 2018 that we break out of this, and a big triangle consolidation like this would be the fuel to drive a move up to test those all-time highs up above 1900. But this year might be a difficult year, where we just we get up here and everybody gets ultra bullish, expecting a breakout and a big move, and then it just doesn't happen. We come back down. At that point, the bears get confident. They start shorting heavily, and it just doesn't break down. And we just probably a market that kind of frustrates everybody. We just don't get a breakout either way, just bouncing back and forth, consolidating. And then 2018 is probably the year where we break out and get the big move in gold.